Hello everyone, welcome back to the channel. Just a quick disclaimer before we begin. This video is for information and educational purpose only. Please do your own research or consult a professional before making any decision based on this content. Thank you.
Today, we are examining Opendoor Technologies, Open, a company that is transforming the residential real estate industry by leveraging digital tools to simplify the processes of buying and selling homes. The foundation of Opendoor's approach is iBuying, where the firm directly acquires properties from sellers, makes the necessary enhancements, and subsequently sells them to buyers, all supported by data analysis, pricing strategies, and an established market framework. Additionally, it provides a range of supportive services, including listing on the MLS, title and settlement, escrow, repairs, and home financing, with the goal of becoming a comprehensive real estate solution. The operations of Open require significant capital and are influenced by transaction volumes, changes in home prices, and overall operational efficiency. Revenue is primarily derived from the profit margins on home sales, service fees, commissions, and various real estate activities. However, since the company holds inventory and incurs renovation costs, it faces potential risks associated with fluctuations in the housing market, interest rates, and expenses related to holding properties during sluggish sales periods. Historically, Opendoor has encountered notable net losses resulting from inventory write-downs, impairments, and overhead expenses related to scaling the business. In terms of market performance, Open has shown considerable volatility. In 2025, stock prices have varied significantly due to optimism regarding a housing market rebound, expectations around interest rates, and speculation about retail investor activity. The stock's trading range over the past 52 weeks has been quite broad, dipping to approximately 51 cents at its lowest and rising above $10 during peak speculative periods. Resistance levels are identified near recent highs, where buying momentum has diminished, while support levels correspond with psychological thresholds and previous consolidation points. Short interest remains high, with about 21% of the float and roughly 0.78 days needed to cover. This indicates that sharp price movements could occur in either direction. Looking forward, critical factors that could drive Open's performance include trends in housing inventory and demand, potential recovery in profit margins, a turnaround toward net profitability, and the successful implementation of its ancillary services, such as title, escrow, and listings. Should the housing market strengthen and Opendoor effectively manage inventory-related losses, there is potential for positive growth. Conversely, should interest rates remain elevated, home prices decline, or costs for holding inventory increase, the risks could be substantial. In summary, Open represents a speculative investment with high beta, centered on the future trajectory of real estate technology, appealing to traders who closely observe housing cycles, shifts in interest rates, and performance metrics.